All right, hey guys, so let's get started. We wanted to bring up Steve. Come on, I'll introduce Steve. Steve Bell is, what's the name of your firm?
Harding Bell International.
And you're Bell of Harding Bell?
Harding Bell.
All right, very good, awesome, very good. And we're brought into us and as FIRPTA experts, and we've all heard of FIRPTA. We've seen it in the contract, right? We kind of glance over it like, oh yeah, there's something we need to know about that. And there's something we need to know about that, right? Because not only obviously from the listing side, right, we represent sellers, and we'll talk about that, but the law is pretty specific about what happens if we don't catch it and the buyers end up kind of getting stuck with it. So we need to understand, that's why on our seller disclosure, one of the questions is, are any of the parties, that have ownership interest in the home that's being sold foreign nationals, so that we can be aware that this needs to be caught on the front side. Okay, so I don't want to steal their thunder, let them talk about it. I won't let the experts tell you, but Steve, tell us about your firm, and then you can introduce our speakers.
Okay, great.
Thanks. Give him a hand.
I appreciate it. Didn't need a hand, but I appreciate it very much. A little bit about our firm. Who here has heard about Harding Bell International before Bob introduced me? Anybody here? Okay, good, great. I always like to meet new people. We love meeting new people. Hopefully the information, I'm not the FIRPTA expert, Susan is going to be the FIRPTA expert, I'll introduce her in just a minute. Our firm, of course, we're an accounting firm. We have several CPAs, enrolled agents, chartered accountants from the UK on staff. Our firm, we do domestic tax, work with a lot of real estate agents, setting up entities for you guys to help maximize your tax benefits. We work a lot with foreign investors doing non-resident tax returns, FIRPTA applications, all those types of things. But as a firm, generally, we do a wide variety of tax services. Our firm has been in existence since 2000. I think it was the founding time. Susan, will introduce in a minute, was one of the founding partners with the firm in 2000. So Harding Bell has been around quite a while. In its current form, Harding Bell International came into being beginning of 2015. So, like I said, we work a lot with foreign nationals, people with investments, real estate agents, property managers, that type of thing. But that's kind of the gist of what we do, just kind of a general overview. Sue's I don't want to steal a lot of her thunder, she's going to go through a lot of the FIRPTA things. But as a firm, we work a lot of real estate teams we work with. If you have questions, the fact that we don't know any of you guys is great because we're here as a resource, and Sue will talk about something. We're here as a resource for you. If there's questions I can answer for you, our firm can answer. We want to help you help your clients and make the transaction as smooth as possible for you. But kind of without further ado, let me introduce Susan Harding to you. She, like I said, she was a founding partner in 2000 with Harding and Associates. Now partner with Harding Bell International. I think you were in accounting since 1990, and you were 10 when you started that. Anyways, I'm going to leave it to Sue Harding to go through the technical aspect, but if you have questions, we'll be here after to answer anything. So thanks a lot.
Awesome. Thank you, Steve. Thank you. Okay, well, good morning, everybody. It's great to be here. As Steve said, it's great to meet new people. As Steve mentioned, we've been around for a while, predominantly dealing with non-residents. My husband and I actually bought a vacation home in the US back in the early 90s, and we learned the hard way about what we had to do to make sure that we were compliant. So long story short, we ended up moving here in 99 and we started a firm. We shared an office. Alan worked in the kitchen near the coffee pot, and I worked in a corridor with the file cabinets. And that's how we started. And literally we started with a few homeowners, and we now have a staff of around 40 total and represent clients from over 110 countries in the world.
Wow.
So although we've, the Harding side concentrated more on non-resident individuals, the Bell side was more domestic, corporate, entities setting up partnerships, that sort of thing. And we'd known Steve and his brother Matt for many years, and eventually it just made sense for us to get together and be able to provide a wide range of services. People that we had as clients of homeowners got interested in doing investments over here in the US, buying a property management company or similar. So we help them transition, doing due diligence and things on potential companies that they look to buy. So that's a very brief potted history. I've not been used to this swanky old PowerPoint, so we'll see.
I take it you're not from like Louisiana,
Well, I was
right?
going to say, you may detect the fact that I'm not actually from Florida. And I'm not Australian.
Alabama.
Yeah, there you go. And I can't do y'all. But I will try you all.
And you say swanky though. I like that.
You did say swanky, there you go. Okay, so we've covered that. We're at the Foreign and Domestic Investment Tax and Accounting. So FIRPTA, who here knows what FIRPTA stands for? Does anybody have any clues?
Foreign Investor Real Property Tax Act.
There you go. You get the prize. Steve, you brought that with you?
Donuts.
Yes, Foreign Investment in Real Property Tax Act from 1980. And this was basically brought in by the IRS to ensure that non-resident sellers of US property paid any applicable capital gains tax. So it's not a tax. People think that FIRPTA is a tax. It's not a tax. It's a withholding in the event of a tax. Welcome. So people get confused. Is I'm going to get taxed on the sale? Well, yes, there is potentially a tax if they have gain, but FIRPTA is not a tax. It's a withholding. And it's really a timing issue. So basically, it's the IRS saying, well, once you've sold that home, you're not going to file a tax return. If you've made gain, how are we going to get that money? So that was put in place so that you'll see it on a closing statement, 15% of the gross sales price is held there pending the appropriate filings to IRS.
I'm sorry, Susan, how much did you say? What percent?
15%
15%.
of the gross sales price.
Got it.
Not of the profit, but of the gross sales price. That's what is withheld. So it's there to make sure that if there is capital gain, that there's enough to pay it. Now, if generally, in most cases, people that have bought these homes, particularly people that are using it themselves for vacations, the gain is really from purchase to sale, if they've made a profit in there. But they can offset expenses during the time they've owned it. So at the moment as well, non-residents don't have any other income here. And the lower tax rate at the moment is 5%. And it's actually been reduced to 0. So essentially, some buyers can, sellers can actually end up with 0 gain because they have this 0 tax withholding. Anyway, we'll get into that a little bit later. What does it apply to? The sale, exchange, liquidation, redemption, gift, and transfers. Basically, US real property interests. So the sale of US property or parcels of land, those are all subject to the 15% withholding. In certain cases, US corporations are considered real property holding corporations. Non-resident alien individuals. So basically, anybody that is not a US citizen or a US resident with a green card, those folks are subject to the FIRPTA withholding. And that's basically, this is a foreign corporation as well that has not made an election under Section 871I of the Internal Revenue Code. We can get into that in more detail if necessary. But essentially, if you have a foreign corporation or an individual that is not a US citizen or a US resident, then FIRPTA is probably going to apply. Single member, yes?
Hi, Susan.
Hello.
Thank you so much. I'm
You're
sorry.
welcome.
I'm sorry to disrupt everything.
No
Forgive
problem.
me. I'm Lisa Bennett. Those of you who don't know me. I wanted to ask a question that I didn't know about. When a person becomes a resident, are they actually issued a social security number?
Yes.
Great.
Yes.
Okay. Thank you.
So the single member entity LLC. So generally for those folks that are, again, a non-resident may purchase a home through a single member entity LLC to mitigate any potential liability for insurance purposes. That's sometimes that goes in waves. We see it a lot, then it kind of fades away, then it comes back again. As far as their filing is concerned to the IRS, they're filing in their individual name. So it's the FIRPTA will still apply. LLCs file as corporations. LLCs file as partnerships. There could be an exemption there, so we could certainly help with giving you some advice regarding that. Back in 2015, the IRS introduced the PATH Act, and that increased the FIRPTA withholding. It used to be 10%, and they increased it to 15%. There are affidavits available for buyers where they can potentially sign an affidavit which waives FIRPTA withholding under certain circumstances.
Now, Susan, when you say that, affidavit signed by the buyer waiving the seller's mandate to.
Correct.
but there's danger for the buyer there.
Correct.
Okay, there you
We
go.
would not normally recommend that buyers do that, because potentially they're picking up the liability from the outgoing seller. If they then do not go and file a tax return and prove that there's no gain and pay any gain that may be there, then potentially the buyer is liable. The buyer is the person that's liable in this whole transaction for the FIRPTA. And most buyers have no clue, what FIRPTA is, let alone what they should do to take care of it.
And unfortunately, most real estate agents don't have any clue.
Correct.
Either.
Correct.
So that's why you're here,
Thank
speaking
you,
loud and
Susan.
clear, and
You
we're
don't
recording
need to
it and
learn all
putting out
this
to
shit.
all of our 1,300 agents across our system and everything. Real quick question too, if we have a copy of the PowerPoint, obviously. When we put this recording on our site, would we be allowed to also put a PDF or a copy of the PowerPoint below that so that they could actually see
Sure.
the slides as well? Okay, good, Jim, so we'll make sure Mara does that.
Anyway, so the PARP Act came in and that was effective February 15th, 2016. So at the moment, looking at FIRPTA exceptions, what is an exception? So if you're selling a property for $300,000 or less, and the incoming buyer is going to reside in that property and signs an affidavit that they're going to reside in that property for more than 50% of the year, then they can sign this affidavit. And that would reduce the 300,000 of the FIRPTA to zero. There's an additional buyer's affidavit available for those where the property is more than 300,000 but less than 1 million. That reduces the FIRPTA from 15% to 10%. So here we go. This is what I was speaking of earlier. The sale price is less than 300,000, and the buyer's going to sign the affidavit to say they're going to reside in the property for more than 50%, actually for the next 2 years. And some residents are going to move in and actually live in the property. We see a lot of that at the moment. The non-residents are selling, but the residents are buying. Still, as I say, not something that we would really recommend for them to do.
Do you know, are there any court cases or anything out there, if they sign the affidavit with the intent that they're going to live there more than 50% for the next 2 years, and life events happen and change, can they come back after and say, hey, look, my intent was to do it, but now my intentions have changed?
Personally, I haven't seen anything
Right.
like that. I guess at the end of the day, the IRS is going to be notified of the sale through the title company. So there's a track. It's down to, I guess, the IRS picking that up and following it through.
Perfect.
So I'll be honest, again, I can't say you wouldn't be audited,
Right.
but it's possible.
As a title company, we did have one buyer that signed the waiver. We call it a waiver, I don't know why.
Okay.
But affidavit, waiver, what it is releasing the seller from any potential liability that he has. And we had the IRS after a buyer for $17,000. And I mean, we tried to help the situation along so much, but he was responsible. So it's not like there's FIRPTA police running around. But I mean,
If they do catch it,
yeah,
that's right. That's why we don't advise buyers signing the waiver. Everybody, let me say that loud and clear, and I'm on recording. All right, so I'm coming after you for the whole amount when FHR gets sued for this.
And some listing agents actually put it in the MLS as a requirement. My understanding is that is not allowed. Okay, so I checked with the MLS and the rules are you can't require it of the buyer to sign that waiver.
It's the buyer's option
Right.
to sign it or not. So basically, the buyer's liable for the non-resident seller's tax, interest and penalties. So that's the section that it refers to. This is the additional buyer's affidavit that I mentioned earlier, and this is for the sale price between 300,000 and 1 million. Again, they have to say they're going to reside in the property for more than 50% over 2 years, and that reduces it from 15% to 10%. So those are the exceptions that are out there. They are available, and people do ask the question, and all we can do as intermediaries, if you like, is give the options. The signed affidavit must be included in the FIRPTA application. We have to send that in, and that means that the buyer's protected if we've got the affidavit for the reducing the 15% to the 10%. Okay, so say we're going into a closing and the 15% is going to be withheld. Now the sellers are thinking, well, okay, how long is this going to take to process? And how long does it take for me to get any cleared funds back? So essentially, they've got two options. First of all, the main thing is as soon as there's a contract and people become aware that there's a non-resident involved, the sooner you speak to someone like ourselves, the better, because we can give the options. Because some of the things differ on the different time frame of when they're closing, so the options may change or become more favourable depending on the circumstances. So option one, the seller opts to have the title company submit the withholding directly to the IRS at closing. So within 20 days of closing, if the funds, if the seller has not applied for an early release of the funds, the title company is required to send those funds to IRS, and there are significant penalties and interest for not doing so. The seller then recovers their cleared withholding by filing a tax return the following year. So a 2018 sale, for example, is reported in 2019. Well, guess what? If you sell in January 2018, you can't file a 2018 tax return until earliest, usually February 2019. How long that takes to clear? Potentially middle of the year, so you could be without funds for 18 months or so. The title company, with option two, the withholding still has to be kept back at closing, so that 15% is still on the settlement statement. It's a different document now, but it's still on that document at closing that you'll see that 15% held there, and they basically will hold that. The FIRPTA application, the application to the IRS to reduce that withholding, has to be filed on or before the closing date. So again, if you have a non-resident involved, it's critical if you've got somebody like ourselves working on the application to make sure that it's submitted, and if there's any change in dates, if it comes forward a day and we don't know about it and the filing's not made, there's nothing we can do at that point. That money just has to go in. So it's really critical when there's a FIRPTA involved that you take the necessary steps to make sure that all parties are aware of timing.
So option one and option two. Option one is the IRS holds.
Yes.
And option two is title company holds.
Correct.
Okay, right.
Now, if the title company holds, now rather than looking at potentially 18 months, it's around 90 days. Sometimes stretches 110, but 90 days is generally how long it takes for the IRS to process this application, and then they issue what's called a withholding certificate. So this is basically the information that we have to gather. And this is where sometimes it gets a little bit tetchy for the buyer. So now you've got a non-resident seller. The buyer could be a non-resident or a resident, doesn't matter. Their information has to be included on that application to IRS. So the main form itself has got the names and the ITIN numbers of the sellers, their address, and it also asks for the buyer's names, social security numbers, or ITINs. Their personal information has to go on that form. So some US citizens quite rightly don't understand why do they have to provide that information. It's part of the process. It is required. It's not that we want to keep the information, it's purely to put on that form. So we basically gather together the information. If the property's been rented, we have to include copies of prior year tax filings, copies of receipts for capital expenditure. So really important if you're dealing with an incoming buyer who's a non-resident, get them to speak with an accountant. If they're going to be renting particularly, they need to know what they need to take care of and what records to keep to make their exit. I mean, they've only just bought it, and they're not even thinking about an exit, but it's so important. If they hold it for 10, 12, and I've met clients this week we've had for 14 years, if they don't hold that information, now you can't prove to the IRS certain expenses, okay? So anyway, coming back to this, we gather the information for the packet. I mean, the packet can be 2 inches thick sometimes, depends on how many years they've owned the property and if they've rented. We send the application to the IRS, and as I mentioned earlier, 90 to 120 days sometimes. That's how long it takes to review it. Sometimes the withholding certificate will come back. It will either be 0, or it may well be that they calculate that there is a potential for gain in there, and they apply a 20% tax rate on that gain. So it could be that it comes back with a certificate that says we require $5,000 to be withheld. So now the title company, we submit to them a copy of the withholding certificate, and we prepare the appropriate forms that go to the to the title company for them to send the payment to the IRS, and the balance of funds then goes back to the
Does
seller.
that 20% figure that you mentioned, let's say there is a gain, right? They determine that there's a gain and there's gonna be, is that always in coordination or in same relation as capital gains? Or does it alter, or is it?
No, they just put, it's just the
It's
rate.
always been 20%
At that
since-
point, it's that rate.
Got it.
It doesn't bear any relationship to what their actual tax rate will be. As I mentioned earlier, for most non-residents who don't have any other US income, they're not going to be in that tax band.
Right.
So the capital gain rate for them can be up to, if you've got 2 owners, you could be looking at $70,000 of income gain that they can receive without tax liability.
Right, yeah.
But they sometimes have to have that withholding go in. They then may well get all that back when we file the final tax return the following year. So just a little bit more detail. This is the sort of things that we have to request. So again, the seller's legal names, address and ITINs. We ask them to sign a power of attorney so that the IRS will speak with us with any questions that they may have. There's a consent form in there. The Line 8 statement is pretty critical. Then there's an authorization form and a copy of the purchase hardware where possible. Sometimes we have to go to property appraisal. Not everybody, again, keeps copies of that documentation. Copies of prior tax returns, copies of receipts, and questionnaire for each tax year that the returns have not been filed. We quite often come across sellers that have rented for 10 years and never filed a tax return.
So a foreign national who is here and rents their property out through Airbnb or
Vacation.
through, vacation VRBO
Yeah.
or whatever they're doing, has to file a U.S. tax return each year.
It's called, unlike the 1040, it's a 1040 NR, non-resident.
Okay.
Pretty much the same form. There's a couple of differences on some of the pages.
Yeah.
It's a Schedule E if you've got property.
Yeah.
It's a Schedule E that's completed for the property.
Okay.
But yes, they have to file. They have an extended filing deadline. They file by June 15th, not April 15th. But yes, they're required to file, regardless of where the income is received. So they could be in the UK, they could be in Brazil and receiving the rents in those countries. But it's been generated by a US asset. That's all the IRS is concerned about. If you've generated funds from that asset, then you have to report that income.
Got it.
Susan, can I make a comment to the agents? As a listing agent, I always recommend, when you're checking to see if they're a resident or not, the first question I would ask them is, do you have a firm that works with you locally? Have you filed any tax returns? And that's going to give you an idea of if you're going to go directly to Harding, and you refer your sellers to them, and they handle the paperwork with
Correct.
them. So it's taking that off of your hands, because a lot of times sellers, like Susan says, that they've been there 14 years, they've never filed a tax return. So they help them prepare those documents for the closing. And then our goal as a title company or as a service provider, we want the seller to have their money here instead of the IRS, because it can take them much, much longer to receive what they deserve to receive after they've cleared.
Good point.
So yes, going back to this for the listing agent, yes, contact ourselves, or if they, as you said, if they've already got an accountant. Although we do find there's a number of accountants that they'll do the tax returns, but they don't want to do the FIRPTA. We get that a lot, so we actually do the FIRPTA for folks that have already got US accountants. And then basically we'll just ask a set of questions. We'll need the agent's contact information, title company information, and we'll then basically work between those parties to make sure that as we get closer to closing, we have everything we need. Big thing, as I mentioned earlier, if there's any change in sale price, sale date, or buyer's information, we have been known to file the withholding, the application for withholding based on a settlement statement we've received, and then find out it didn't happen and another buyer stepped in. That application is no good whatsoever. It has to be, even the sale price, even if the sale price changes by $100, that application is no good if it doesn't match the paperwork that follows through. So it's really critical on those points to make sure that the relevant parties are notified there. Again, this is what I mentioned earlier, the buyer's requirement. And this is made so much easier if you're representing the buyer, that just explain to them it's absolutely a normal part of this process where you've got non-resident sellers. It is something that they feel a little bit, you know, in these days of identity theft, it's obvious that people don't want to give their information out to people they don't know, but it is absolutely necessary. So full name and address of each buyer, their tax ID, email address and phone number. And then basically if the buyers are non-residents also and they don't have tax ID numbers, which they probably won't if it's their first purchase, we'll pull all the paperwork together and get the appropriate applications made for the ITINs as well. We've got a number of people in our office that are certified acceptance agents for the IRS. So for example, we can have folks come in with their passport or identification documentation, and we can certify copies as being true copies of the originals. Otherwise, sometimes those documents actually have to go to IRS, and you don't want to be sending your passport to the IRS.
That, just to make a comment on that, the fact that Harding and Bell does have that certification from the IRS really benefits your customers, because they're able to, and if they don't, then could you imagine asking someone to send their passport? I mean, that's a scary question to ask somebody, and then not sure when and how they're going to get it back.
Right.
So
They have to send it to where?
To the IRS.
Yeah.
Yeah.
But
Right.
right,
That's like me going to
right.
Moscow.
Oh,
Hey,
right.
let's hold your passport for a while. We'll let
Yeah.
you know when you can get it back.
It
Yeah,
does
thanks.
depend on the country. Like for example, Canada, Canadians can go to pretty easily get from their passport offices certified copies of their passport pages. The UK will not do it. The UK passport office will not issue certified copies of passport, so you can't get that. There are some countries where you get passports through your police station. So it's really, you start to learn a lot about different countries' passport systems when you do this. So it's having the ability to have that. And most times people come here at some part in the process, so we can meet with them at the office. And worst case is the UPS the original to us, and we can certify the copies and then confirm their identification through WhatsApp, FaceTime, Skype, that sort of thing. So there's a way around it rather than sending it into IRS. I mean, we have had long delays where people have chosen to do that. It's a bit of a nightmare. So for a selling agent, as I mentioned earlier, just tell them that FIRPTA is going to apply, and I reassure them that it's absolutely standard practice. And you know, you don't have to be an expert, you just need to know who the expert is, and we're more than happy to explain things to people. Our website also has a couple of pages on FIRPTA and how that all comes together. Provide HBI with a buyer's contact information so that we can again very quickly get a picture together of how we're going to put this application together. I mentioned earlier one of the, I think it was a line 8 section that's needed as part of the packet. That comes down to what happened when, if it's a non-resident seller and they bought that property from a non-resident seller previously, was FIRPTA dealt with them? Because if it wasn't, if you can't prove that FIRPTA was handled there, they now can't apply for an early release of withholding. They have to just send that 15% in and wait till the next tax year. So line 8 is a critical piece of information. It's basically a document that's signed by the sellers, and we have to support that. So usually it'll be a copy, either they'll have a copy of the 82.8 forms. If there was withholding, they'll have a copy of that as the buyer in that first process, or we'll get a copy of maybe the settlement statement from that transaction, and we can show that the 15, or it may have been 10% at that time, but it will show it had been handled. But if you can't prove that piece, we also have a lot of situations where, unfortunately, people die. So now you've got somebody still on a deed that passed away, and have they done an estate tax return? So non-resident sellers don't understand that if they have an owner of property that passes, they have a filing requirement here. So now you've got a title company that they cannot even release the whole funds from closing, let alone the 15% unless the IRS has actually cleared that transaction. So there's a lot at the beginning that you have to get into just to be like Sherlock Holmes, you know, just to investigate and see where are we with this application, and then we can determine what we need to make it happen. As I said, you don't need to be an expert, you just need to know who to call. They're a bit like FIRPTA busters, I guess. You may be interested to know, last year we filed over 800 FIRPTA applications to IRS. We're probably one of the biggest filers to the IRS in the US, and alone in Florida. We represent countries in 120 countries of the world. There we go, it's gone up since I last looked. And now, question time, and this is where basically this is where a lot of your learning is, because I can talk all day long, but sometimes it's specific questions. You may have a situation that you've come across that you're just, you know, interested in getting an answer to, so
I got you up there and Lisa here, so real world, right? From a seller's perspective, it's obviously if you know the seller is a foreign national, but it's a question that you have every right to ask when you go to take a listing is, hey, are you a U.S. citizen, right, or a green card holder,
or
right?
resident.
Then, you know, what's that called, the green card, is
A
it?
permanent resident?
Okay, permanent
US
resident. Then we're good. If not, then we need to get you in touch with Party Bell, right? And so you have every right to ask that. As a buyer, though, right, representing a buyer, yes, it's on our seller's disclosure, but not everybody uses the same seller's disclosure. Some people just avoid the seller's disclosure altogether. How do we protect our buyers on the front side when making an offer to say, hey, look, we need to know early on in this process if we're dealing with a U.S. citizen seller, because it does have ramifications on my buyer. Any suggestions on how we would go?
That's not an MLS requirement.
It is.
I was going to say, I thought it was
It's
a
in the
requirement of
MLS.
MLS that they have to state that the seller is a non-resident alien.
Okay, perfect.
Yes.
However, at the
Not
bottom of every
everybody
MLS sheet, it says this information is for informational purposes only, not to be relied upon,
Right.
yada, yada, yada.
Right.
So that's that's the get out of jail free card for the listing agent. Say, well, I didn't know, right, or whatever.
And oh, I'm sorry.
No, I mean, obviously,
It
title
is.
search ASAP,
Oh,
right?
well, we absolutely, as a title company, question as well, but it's always good to get all the information that you can up front. That being said, we work with Harding & Bell all the time. There's other service providers around here. For your title company, the ease of working with a firm like this is because the communication is so good. Their department, they have a FIRPTA department, okay, and like she said, she did it over 800. So you're putting it into safe hands. It is required by the MLS for the listing agent to disclose. So they're violating the MLS if they don't do that. Now, I know a lot of agents may not know, right? Sometimes they're not asking the right questions. There's a lot of indicators as a buyer's agent. If it is a property that if it's used for vacation in a community that's vacation, all of those different indicators. So we need to ask as a buyer's agent. The one thing that we see on a regular basis, and I'm sure you do too, Susan, the seller doesn't want to pay, okay? So they're looking for a way around it because they want all their money.
And they're going to shove that affidavit at you.
Well, and there are title companies that are known to put that in the closing documents and disclose it at the time of closing. That is absolutely, in my professional opinion, unacceptable for a buyer. So that being said, we would never, ever, ever do that. So you got to be careful when you're doing that. The other thing is that if it's not disclosed in the MLS, it comes out typically in our title work. So we'd be notifying everybody.
What in the title work proves that there's a foreign owner?
Well, we search back 60 years, right?
Okay.
And then typically there's an indicator that they're not a citizen. It doesn't say non-citizen alert
Right,
or anything
okay,
like
okay,
that.
that's what
Our
I'm saying.
examiners will bring that question up to us to settle it. So it becomes a question that needs to be answered based on our title work. But this waiver situation, like I said, sometimes I've had agents say, they put that right in front of my buyer and they
Yeah,
never.
I got the
even
U-Haul in the parking lot, and
Yeah.
okay, if you wanna move into this house today, and, because you've already moved out of
So
your
you got
apartment,
that pressure
you're signing
cooker
this,
going
you're
on.
signing this
Mhm.
document.
Yeah,
And
we
so
would-
that's not where
And
you
as-
wanna be.
And as agents in the process, we're all, as far as the IRS is concerned, if something's not been held correctly,
Yeah.
we're part of who they're gonna come to.
Right.
To get answers. I'll just cover one other point. We mentioned one of the, a couple of exceptions earlier about reducing the withholding. One of the questions that agents get asked sometimes is where you've got somebody that's actually selling for less than they purchased, or they've got a mortgage, and because that 15% has to be available. They can't just say, well, I'll give it you, but actually I think I'm going to get it all back, so just put like an IOU
Right.
on the document. It has to be there. So some sellers actually have to bring funds to table to be able to close. Now there is another filing that we can do in the right set of circumstances. It's called an exemption for hardship. So if a seller has to bring funds to table and they just cannot do that, we can actually speed the process up. I mentioned the 90 days. We have been known sometimes to get those turned around within a week, but it does come down to everybody's got to be able to have the social security numbers or ITIN numbers, because ITINs themselves can take 4 to 6 weeks to be issued.
ITIN is the International Tax ID number?
Yes, I was
Okay.
just going to
All
go
right.
into it.
Individual taxpayer identification number.
Yeah,
Okay.
it's called several things, but they're all the same thing and they have to be applied for.
It's an ITIN.
So it takes like six to 8 weeks.
It's not a direct replacement for a social security number. It's only relevant for IRS filings.
Yeah.
So for example, your management company, if they're getting bookings for that homeowner, they have to have that tax ID number, otherwise they have to withhold 30% of any rental income and send that to IRS. So until that person has an ITIN, and then they can choose, they can say, you know what, I'll let the 30% go, and that's my cost of doing business. Or they get that tax ID number and they sign a form saying, it's a W8 ECI, similar to a BEN, a little bit like a W8 BEN that the lenders send out, but it's basically saying, I'm a non-resident, I'm renting this property, well, I'm going to file a tax return, here's my tax ID number. And that way, they get the full proceeds from the rental income, and then they just file their tax return in the normal way. But there's a lot that comes out of closing. People think they've gotten away with stuff for a long period of time, and it's like, well, I let friends and family in, and well, I maybe rented it here and there, but I never made a profit. Well, the IRS doesn't care whether you made a profit or not,
Right.
it just wants to know.
We'll determine that later, but for right now, we're holding 15%.
And that's why they increased it too, because a lot of people that are non-residents and have the benefit of investing in real estate here in the US. So I look at it like, it's a privilege for you to own this property here, and you have a responsibility to our federal agencies to be able to collect what is owed to the US. Not all people that are non-residents feel that way. So, like I said, sometimes they don't want to withhold, and of course the agent wants to accommodate their seller. And oftentimes sellers who have sold multiple properties will really be avid about it not being collected. But from an agent standpoint, that's the way I always look at it. If I was representing the buyer, I'd say, no, don't sign the waiver, and any attorney would tell a buyer that, any real estate. And if it was the seller, I'd say, look, you've had the benefit of owning property here these years, and vacationing and family and all that, and that's part of the requirement. You just may have to make sure you have the right firms representing them and preparing the documents. Because some of them have just a local bookkeeper or something like that. I always
Some go
say,
into like an H&R block, and an H&R block, they do tax returns, but they don't necessarily have experience with
and
residents.
specialize in people that are not residents. So this is my number one go-to. And there are many other companies that
Yeah,
provide it.
text in the mail, so yeah.
Well, I mean, from a title
Yeah.
perspective,
Yeah.
it can change the course of the transaction and the closing dramatically for the buyer and sellers. So, meaning, if you don't have the right people and they're not preparing the documents and communicating properly, it can delay or even risk you're losing the closing. So that's why I find it so important. And in our market, there's so many non-residents that own in Osceola County.
Sure.
So, it's very, it's very common in my office. All of my, title agents are experts on FIRPTA.
Yeah.
Not like you guys.
Well, and they know, here's my recommendation to FHR agents, right? Representing a buyer, okay? Representing a buyer, you usually don't get to control title. We understand that, right? So you're dealing with another title company that has been hired by the seller, right? You still are in communication with the title company, obviously. Early on, now hear me clearly, early on in the process, you need to have this discussion. Mrs. Title Agent, where are you in the process in determining the citizenship status of the seller? Where are we on, that's a question that you need to ask, all right? Where are we in determining the citizenship status? Because we need to know 3 weeks before closing if they're going to try and slide this affidavit to our buyer at the closing table, right? We need to understand, okay, well, they came back, oh yeah, they are a foreign national. Okay, have they reached out to a qualified intermediary person like Harding Bell to help them get this process started? What is your intention for the withholding that needs to take place at closing? And you're, oh, well, we just have the buyer sign a waiver. Okay, ding, 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 ding. I need a copy of that so my buyer can take it to Harding Bell, and Harding Bell will say, don't sign it, Mr. Buyer. All right, and I'm just telling you, is everybody clear on that? From the buyer, that's the only way you can, because there's no, in the MLS it's supposed to be, I get it, all right? But if they missed it, they're going to say, oh, sorry, I missed it. We caught it before closing, 22 minutes.
Yeah, and I mean, just for clarification with that, I'm not saying that all title companies do that.
No,
I know
absolutely.
that's been experienced by them, and when they're at the closing setting, they're going to sign it. So I feel like it's signed under duress.
Sure.
Right? Now, these guys, when they're communicating, they have this experience with the sellers and help them go through this process and encourage them. And as a title company, we're communicating. So I'm getting buyer's agent information and the buyer's information. We get that from the mortgage company, so we can get that back and forth to Harding and Bell. But not all title companies have a lot of familiarity with FIRPTA.
Irene, did you have a question?
Okay, I have a question.
Oh,
We waited
sorry.
very patiently.
All right. Hey, before when I'm just kidding.
So on the listing side, when we take the listing, is the seller able to start the process at the very beginning?
Nice.
We don't need to wait for a
As
buyer.
soon as you become aware that you've got a non-resident seller, and if they've got any questions on the compliance, yes. I mean, we might not be able to start doing anything, but we'll start gathering information on the property. We can't do anything about the application. And sometimes, people will say, well, why don't you file the application earlier in the process? Why wait until my 90 days could start earlier? Well, the problem is that if you file it as soon as you get the contract and something changes on that contract, what I said earlier is now that application is no good, we've got to do a whole new application. So we generally wait until the day before or the day of closing. So it's a bit more nerve-wracking, but that's when we know that we've got the final documentation that's going to be good when it's submitted.
And is there any difference if the property is furnished?
No.
Okay.
No.
And we pretty much do all, I mean, we start the whole process, like an example, when they list, we can, if they don't have ITIN numbers, we can start that right away. We can, because if they're here, many times they do the listing appointment, they're here in the US, they can come and see us, and we can do the ITIN there, that we don't have to go back and come, then come back later.
If they're here, that's again a good point. If they're non-residents and they're here, always ask if you've got a tax ID number, because if not, you can get that done while they're here with their passport. They don't have to go through a process outside of that.
And if it's on the buyer's side, as long as they don't sign that affidavit, they don't have a liability.
If they don't sign the affidavit, then that 15%, that's what you've got to look at as an agent on that final settlement statement. As long as there's a 15% on there, then that buyer is covered.
Buyers are covered.
Regardless of how the seller's going to take care of it, your buyer is covered. Because
Even if they have more liability than the 15%
correct. Their
coverage.
15% is what's required. So that's what they're required to make sure is on there. Yes.
It's just a quick question, I'm sorry. I work with investors. Some of them are foreign, and I did not know they were foreign. It was before I joined FHR.
Do the disclaimer.
So what happened, it was a form of LLC. It was a US corporation. It had a US citizen on that LLC and 2 non-residents.
So it's a partnership, really?
Yes.
It's a
Or-
partnership,
or
exactly.
corporation.
So we went through the withholding of 15%.
Mhm.
And they were very, as you said, they were very angry that, you know, they had to go through all this.
Mhm.
And what would be the best suggestion for them? Do you have anybody who speaks Russian in your company?
Do you know, we get asked about different languages all the time. We find Google Translate is very good.
Okay.
So, I mean, I've communicated a lot with Chinese buyers and sellers in that by using Google Translate. I mean, we couldn't have somebody in the office that could answer all the questions
Sure.
for all these different nationalities, but we find a way.
Okay.
But yes, it's a good point. So we've also had situations where you have a husband and wife, and one of them is a US person and the other is not. So now it's 7.5%. So, but it still has to be withheld. So it's not the full 15%, but it's the, you know, it's on that one person's ownership share, if you like.
Oh, the percent.
Yeah.
The 15%, so if they were a third partner,
Right.
it'd be 5% and
Yes.
so on.
Yeah.
Okay.
Yeah.
Clarification for me, when there is an LLC, and they are not responsible for the 15%, right? There is kind of a loophole that I need to know more about that a lot of agents have learned about, but my understanding is there's ramifications in another way as far as taxes. So if there's an LLC created and there's one member, they can avoid the 15% at closing?
No. A single member entity LLC is basically an individual.
Okay.
The IRS sees right through the LLC.
Okay.
The LLC is generally just for liability cover.
Right, limited, yeah, okay.
So if you've got a corporation, a foreign corporation, then that's definitely withholding.
Right.
A partnership, there's sometimes some documentation we can file for the partnership. Basically, they have to just state that they're going to deal with it through the tax, the
partnership return
return.
right at the end
Yeah.
of the year, right? There's some different scenarios like that, and there are some sort of loopholes, but that's
But
why.
they wind up paying in the end, right? I
Right,
mean, that was
right.
my understanding. The end
Yes.
result is that they're collecting from them.
Yeah, they
Okay.
did, yes, they
Mhm.
did.
Well, the partnership on the transaction, there may not be a net gain, so it's a bit like,
Right.
you know, so it just gets them out of having the FIRPTA withholding
At the
the
closing.
time of sale.
Yes, okay.
While we're on that real quick, I'm sorry, just on the partnership, on LLCs, I just want to.
Do you not like her asking questions?
Well, no, I do, I love it. But while I'm on LLCs, all right, because I'm big on making sure, as a broker, that this goes across even outside FIRPTA, that the correct people are signing listing agreements and contracts and closing statements, right? So a lot of investors use LLCs. And so my drive to you as agents is you have to confirm that the person signing whatever document putting from a listing agreement to a contract to a closing statement, right, is in fact the person that's authorized to sign on behalf of that LLC. A lot of people go to, Sunbiz and look it up and say, oh yeah, well, the registered agent. The registered agent is not the authorized signer. Registered agent is somebody often that's paid to set up the LLC for many people, okay? So you have to look and go deeper. You actually have to see, you have someone, an attorney, not you, take a look at their operating agreement to see that that is indeed the person authorized to, in debt, to sign on behalf, whatever that is for that LLC. Does everybody understand that?
Right.
Okay, there's a big difference, and it's beyond our purview to make that determination.
Title will help you with that as well.
Correct.
To make sure you got the right person that has the authority to sign.
Okay, now Wendy, sorry.
Okay, what are your fees?
Fees, okay. If the seller is an existing client of ours, it's $675 for the FIRPTA application.
Okay.
That includes if the incoming buyers are non-residents and need ITINs, that's all included in there. If the seller needs ITINs, then there's additional fee of around $125 for each ITIN. And we take care of all of that at the time of submission. If they need tax returns doing, then it depends on how many owners, how many years, but around $400 a year for tax returns. So and I'm talking individual returns. So we generally put all that together and it will go on the closing statement, so we just get paid out of closings.
If I could just make a note on that too, is that we're not the cheapest. There are cheaper accountants out there. But let me, if I can tell you a little story. I was sitting with the real estate agent having breakfast with him and his wife, and she got a call from, it was supposed to have a closing. Well, the buyers, evidently the accountant told them, well, the 15%'s got to be sent into the IRS. This is going to happen. They were upset about it. They were from Colombia. So happened to overhear the conversation. I asked, well, who's handling that? She said, well, evidently they gave the seller option. They can go to this account or they can go to us. Well, they decided to go to a little bit cheaper one. Well, I was able to talk with them, talk to the agent, we were able to talk to the seller and explain exactly what we do and the fact that we don't have to submit that money to the IRS. It can be held in escrow. That's just one example of it. We were able to pull that deal out of the fire. The deal was gonna blow up. It just happened to have breakfast with them and at the time, and it was just, I was on a Saturday maybe. But there are places you get things done cheaper, but as Lisa will tell you, we end up having to pull out of the fire a lot of deals that are messed up because other accountants. Now there's some great accountants out there, don't get me wrong, there's some really good ones, but there's some ones that don't know what they're doing, there's title companies that don't know what they're doing as well. So,
well, in that case, what you were saying is, hey, look, we can expedite this and probably get it done in 90 days as opposed to potentially 18 months.
Exactly.
Right, and that was acceptable.
Nobody's perfect. Everybody makes mistakes, but we're certainly, our fees, we have a lot of experts back up what we do, as well as we have a direct line to the IRS where we can sort a lot of these things out, without having to go through a whole big rigmarole. So
that's a big deal for your customers. That's what I want you all to appreciate here. When it's not about, it's not always that you get what you pay for. So, and I understand that you want the seller to retain as much as they can when they sell their property, and I completely respect that. But when it comes to the expertise and having the direct line, I like that, direct line to the IRS. So they have contacts over there. So unlike a smaller firm that may say that they have a lot of expertise in non-residents, you want to be sure. So when we have questions as a title company, we call Harding and Bell because we get the answers back, and it's proficient, Anyway, enough for selling on that.
One other thing I was going to mention, because we're coming to that time of year now where the option is now open to the sellers, maybe a little bit more consideration, because now, okay, they're going to close on the 15th of December. Well, why hold the 15? Let's just send the 15% in. I can file a tax return in February, and May I'll get the funds. It's not that much different from 90 days. And that's what everybody goes on with, and then all of a sudden there's a delay and it closes the 2nd of January. Now, you can't do anything until 2020. And it's so critical this time of year. We really spend a lot of time explaining that to people. Yes, you don't have to file the application. You can just wait and file the tax return. But just be aware that if this slips, and it could be by 2 days, you're now in another tax year. Mm-hmm. Now you've got to add on another year to getting your funds back, because once it's closed, that's it. So it's just something else that, we explain to people. The closer you get to the end of the year, it's a great consideration. You can save that fee, you just file your tax return. You may still need ITINs, that's fine, we can still go ahead and do that. But it's absolutely critical then that it closes in this tax year, because if it slips, then you've got that problem.
As agents, there's only a few questions you need to ask, okay? If they are a resident, have they filed a tax return? And then when you're working in the transaction, the goal is to retain the escrow funds here in the U.S. So you don't need to be an expert on all the other stuff, right? You just want to be sure that if it's your seller, that it stays here and doesn't go off to the IRS. In order to do that, they need people to prepare those documents and get us the withholding certificate so we can keep it. But that's really what's most important.
One other thing, this is just a service it's just something nice to be aware of for your sellers as well. A lot of non-resident sellers don't realise that once, say they've sold up and they've taken the money from the sale of the property, and now it's the following year and they've got another $5,000 to come back on their tax return. And they close their bank account, or the bank account's that they get the refund and it goes into the bank account, because they have that option when they file a tax return for the refund to go into their US account. They won't send it outside of the US, but they'll send it to a US account. Most US banks will not transfer funds out from their bank outside of the country without the non-resident being in the bank. We have had so many situations where we've had calls from people who did not realise that. We've put it in our literature when we first start the process, but it's just something else, and it's that you can advise your seller on that they may not realise. So if they're here, they need to go into their branch and find out what, if anything, they can do, or they need to set up an account with someone like Money Corp or Currencies Direct, and that way any funds released can go to those banks and then get released back to their home country.
Can Title send, if Title holds it?
I think Title will do that as
Can you
well.
send it out of the
Money
country?
Corp.
No, we don't send it out of the country. No, they'd have to hire an exchange company.
You still have to do that.
Yeah.
So it is tough, you know, so, and we've had people that have had to actually come apply in to be able to go and to get their funds released from their bank. So it's really, really difficult.
But the
to get
bank
funds
will
in.
release it to Currency Direct or?
Right, I think they just have to set up a Currencies Direct
Okay.
account, and then the title company will just release funds to that account. And when if they're doing a refund, they just need to figure out how they're going to get that which account they're going to put it into. Because again, I think they can use their Money Corp account because it's a US account, and then Money Corp will shoot it out.
Did you say the fee was $675?
Yes, I didn't finish off. $675 if they're an existing client of ours. If they're not a current client, then it's $775.
Okay.
This is for what?
That's just for the basic application,
For the
right?
FIRPTA
FIRPTA
application,
application.
And one of the things that we mentioned, you can introduce your customers. They don't really start working until there is a secured buyer, because they're reporting to the IRS, the seller and the buyer. My
And the
suggestion,
contract price and all those things.
correct.
Yeah.
I always suggest, and Nina is just phenomenal. She's in their FIRPTA department. She, introducing the sellers to them, establishing a rapport so that they have a trusting relationship with them. Because oftentimes people who aren't residents too are uncomfortable with a lot of the ways that we do things. So having a rapport with them really, really helps. And then you've already set that standard that they're going to be working with them, and they have that connection already. So you're not stuck in the middle.
And it gives them the opportunity to gather information together rather than waiting until now they've got a
Knowing what they're
contract.
going to need when they get the buyer.
Yeah. So yes, and if you're dealing with, if you're selling a property to an incoming non-resident, as I mentioned earlier, if they intend renting, just give them a heads up. You need to keep copies of your documents, and it's crazy, but you don't always think about your exit when you're just entering, but it's well worth. Again, just these little tips that you can pass on.
Thank you.
Awesome.
You're
Thank
welcome.
you.
We've finished.
Very nice.
If I could, before you come up, Bob, if you guys have cards, I'd love to trade with you. I wouldn't get ready, you come on up, but yeah, just wanted to.
Absolutely. And one last question.
Yeah.
Obviously, you guys are in Kissimmee, right?
Yes.
Is that where you're headquartered? We're going to be shooting this out and putting this on. And I've got about 1,100 agents in
Oh, wow.
Tampa,
Okay.
right? But obviously, you can handle.
FIRPTA's FIRPTA.
Yeah, FIRPTA, yeah,
and
right.
we deal with all throughout the US.
Okay,
So,
all right,
yeah,
okay.
absolutely fine.
Okay.
Email is a wonderful thing.
Perfect, yeah. So you can do everything. Awesome. Well, great. Well, thank you so much.
Oh, hey, you guys too, I don't know, Susan, when you started, they also have foreign loan, service providers
Sounds good.
for people that are looking for mortgages, through Harding and Bell. So if you're